On to your markets news now. Asian equities were on a downer following the US's cue from the previous day. Also weighing down on the market was a falling quarterly earnings from French luxury giant LVMH, which showed that demand out of China for luxury goods had worsened, continuing to indicate the struggles in that economy. The Nikkei share average fell by 1.85%. The Hang Seng Index closed down 0.16%, while the Shanghai Composite Index rose by 0.05%, basically flat. US stocks lost ground. US stocks lost ground in yesterday's trade. This on the back of disappointing earnings from Europe's biggest tech firm, ASML, which resulted in a widespread sell-off of chip makers, with a drop in energy prices also having an adverse impact on energy stocks. The Dow Jones Industrial Average declined by 0.75%. The S&P 500 fell by 0.76%, while the tech-heavy Nasdaq Composite declined by a greater margin of 1.01%. Looking at the local market, the JSE is flat today, with the all-share index slipping 0.1%, standing at 86,041 points. And the the rand is trading at 17 rand 57 against the US dollar, 22.87 against the British pound, and 19.14 vis-a-vis the euro. Looking at commodities, gold is trading at $2,675 an ounce, platinum at $990 per ounce, while the price of Brent crude oil is trading just shy of $75 a barrel. Warwick Lucas is a portfolio manager at Vunani Securities, and he's going to help unpack the markets for us. A very good afternoon to you, Warwick. So US and Asian markets were in the red, seemingly on the back of not so stellar tech earnings in the United States. I suppose it's going to be up and down with the current earnings reporting season.
Yes, certainly, very much so, Nompu. I mean, in terms of tech, it goes further than the US as well. I mean, just think about the Dutch chip giant ASML, for example, has also just reported disappointing results. So clearly the issues around research and development spend in AI has a broader front than just the US. And of course, in terms of the US chip because we're looking at an environment in which politicians on both sides are looking at export restrictions to China, and that's going to lean on them quite hard as well. I think it is important to note in passing, though, that the companies that make up the big US indices aren't necessarily reflective of the whole US economy. So it doesn't mean if tech is in the toilet temporarily that the whole of the US would be.
Yeah. When we talk about the luxury goods company LVMH and the fact that they haven't done so well, why is that a big deal? I mean, not everybody in China is rich and can afford to buy a $30,000 bag or watch. So why is that indicator so important?
Absolutely. I think the key issue with luxury goods is that they are aspirational. So when the spend on luxury goods falls off, it's actually a fairly good indicator of consumer sentiment. So poor spending in China is a very definite indication that the Chinese consumer is standing with their hands on their pockets. And it's probably not surprising. I mean, monetary policy in China has been very restrictive, and so that's flowed through into the air.
Yeah. So how are you seeing the local market and the fundamentals here?
Okay, so I think some quite positive comments coming out of the SAB, for example. I mean, we're seeing indications from them that they're looking at CPI in the bottom half of the 3 to 6% range within the next 3 quarters, and they note pricing in the markets looking for around about 125 basis points of cuts. So that's a fairly positive outlook compared to what we're used to from our generally somewhat bearish SAB. I mean, if we What we really are looking forward to now, I guess, is a promising report card from the medium-term budget, which happens at month end. But what we don't need are obviously ridiculous tariff hikes from Eskom or a whole bunch of load shedding. So there's always some depending. But our rate cycle should hopefully dominate. By the same token, we obviously don't want bearish news from China to be our problem either. And for further news today, look out for retail sales data at 2:30. That could contain a bit more info.
Yeah. And then lastly, let's take a look at Sasol. I did mention in the intro that energy stocks have been hit by, lower fuel prices or lower oil prices. But of course, Sasol is a little bit of a different one. I see that stock trading at around 112 Rand a share. Do you think it will ever get back to those days of trading at 400 Rand a share?
Well, I think shareholders certainly hope so. I think in terms of commodity outlook generally, I mean, we need to keep an eye on the Trump trade, i.e. who's going to win. I mean, the Republican outcome generally not positive for commodity producers because it generally would mean an opening of the taps for oil. But I think there are quite good shock absorbers for Sasol. I mean, the current price that they receive, given where the rand is and where oil prices are, they are generally profitable. And the Northern Hemisphere winter outlook, albeit that it's been a little warmer than average, it should still be okay for them. So, yeah, all in all, I think the valuations on Sasol, quite attractive. Current consensus on them is a buy. So I think that Sasol can recover, but it's got a way to go before it gets that old blue chip status back.
Right. Thank you so much, Warwick, for your time and insights there. Warwick Lucas, he's a portfolio manager at Vunani Securities.